Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden within corporate filings. And let me tell you, today's filing is a bit of a time warp. We're diving into what Israel Acquisitions Corp is up to, and it looks like they're playing a bit of a waiting game, extending their deadline to get their business deal done. First things first, let's get our bearings. This report is all about Israel Acquisitions Corp, and some important changes they've made. It seems like they're dealing with some uncertainties, especially with their stock being delisted from the Nasdaq and moving to the Pink Limited market. This move typically means less liquidity and potentially a lower profile for investors. Now, about this delisting, apparently they didn't meet certain Nasdaq requirements, like having a minimum market value of $50 million in their listed securities. So, starting in late 2025, their securities were suspended from trading on Nasdaq and began trading on this Pink Limited market. Then, in January 2026, Nasdaq officially filed the paperwork to complete the delisting. This is a pretty significant event as it can make it harder for investors to buy and sell shares and can sometimes signal financial trouble or a change in the company's strategy. The big story here is an amendment to an important agreement, specifically the trust agreement. Think of this agreement as a rulebook for how the company manages money set aside for a specific purpose, usually to complete a business combination. They've extended the deadline for this business combination from January 2026 to, get this, January 2027. How are they extending it? Well, every month that they need more time, they're putting a small amount of money into their trust account. It is either $5,000 or 5 cents per outstanding share, whichever is less. This money is essentially compensation for keeping the trust account active for longer, and it is given to the trustee in exchange for a kind of IOU. A promissory note that gets paid out when the business deal finally happens. It is a way to keep the company alive and give them more time to find the right business to merge with or acquire, without immediately jeopardizing the funds in the trust. Following up on that trust agreement extension, they also amended their company's founding documents, their memorandum and articles of association. This is essentially updating the company's core rules to reflect the new timeline for their business combination, which can now be extended up to 12 times for a full year, all the way to January 2027. This shows a clear intent to keep pushing forward with their mergers and acquisitions plans, even with the extended timeline. And you know what happens when big decisions like this are made? Shareholders get to vote. On the 16th of January 2026, the shareholders held a meeting and approved these changes. They voted overwhelmingly in favor of extending the company's business combination deadline and amending the trust agreement. It looks like over 5.4 million shares were in favor of these proposals, with only a handful voting against. This strong shareholder support is a positive sign, indicating that the investors are comfortable with the company's strategy to extend its operating life. Looking at the specific votes for the extension amendment proposal, which is basically the agreement to extend the deadline, a massive 5,470,401 shares were cast in favor, with just 5 against. Similarly, the trust agreement amendment proposal, which deals with how the trust money is managed during these extensions, also saw overwhelming approval with the exact same vote count, 5,470,401 for and 5 against. There was also an adjournment proposal, which basically gave the company the right to postpone the meeting if needed. This too was approved with the same near unanimous vote. It is clear the shareholders are on board with giving management more time. Now, some shareholders decided to take their money and run. In connection with this vote, almost 300,000 Class A ordinary shares were redeemed. That means these shareholders exercised their right to get their initial investment back from the trust account. As a result, about $3.6 million was paid out to these holders. This leaves roughly $6.2 million in the trust account. This redemption is pretty standard in these kinds of situations where companies are extending their deadlines. Shareholders who don't believe in the company's future prospects or want their money back sooner have the option to redeem their shares. The fact that a portion of shares were redeemed shows that not all investors are keen on the extended timeline. While the majority supported the extension, some likely saw this as an opportunity to exit their investment before further uncertainty. It is a normal part of the SPAC lifecycle, especially when extensions are involved. And finally, as with any of these filings, they list out all the supporting documents, the exhibits. This includes the amended company documents and the amendment to the trust agreement itself. It's all the legal paperwork backing up the decisions we just talked about. Let's focus on Exhibit 3.1, which contains the actual text of the 5th amended and restated memorandum and articles of association. This is the foundational document of the company, and by amending it, they're ensuring their legal structure aligns with the new extension period up to January 2027. It is like updating the company's constitution to match its new game plan. Then we have Exhibit 10.1, which is the amendment to the Investment Management Trust Agreement. This is the critical document that outlines the rules for the trust fund. The amendment here is key as it details the terms of the monthly extensions, how funds are deposited, and the promissory note issued to the trustee. It is the nitty-gritty of how they are managing the cash reserves and extending their search for a business combination. So, what is the story here? Israel Acquisitions Corp is clearly in a phase of extending its runway. They've successfully pushed their acquisition deadline to January 2027 with shareholder approval and have navigated the necessary legal and trust agreement amendments. The delisting from Nasdaq and move to the Pink Limited market is a significant hurdle, indicating challenges in meeting listing requirements and a potential shift in how their shares are traded and perceived. The redemptions show a split in investor confidence, with some exiting while the majority seem willing to wait longer for a deal. This extended timeline gives them more time to find a suitable acquisition, but it also increases the risk of running out of time or finding a less than ideal merger partner. The company's future hinges entirely on their ability to secure a successful business combination within this new time frame. Alright, that is our breakdown of Israel Acquisitions, Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the extended deadline and move to the pink market are smart moves or signs of trouble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.